Hello and welcome to this week's webinar. My name is Nathan Batchelor and I'll be your host for today. Before I begin, I'm just going to read through this disclaimer to read along as well. Beyond Trader LLC is strictly a research publishing firm. The information we publish is based on our opinions plus our quantitative models, statistical and financial data, and independent research. This service is not registered with any financial regulatory agency, such as the SEC or any other organization or governmental body. By using our platform or our services, you acknowledge that we do not provide personalized recommendation or advice. Alternative asset classes are volatile investments and carry significant risk. Please do your own research before making any financial decisions. Okay, so on today's agenda for the normal Sunday educational webinar, I'm going to be looking at liquidation data. I'm going to be looking at the current relevance to the market and price action. And also, I'll be comparing that with a trading plan for altcoins and also looking at the liquidation data for altcoins themselves. So getting started with the educational content and looking at liquidation data. So basically, this is what it looks like. The preferred choice of liquidation data provider for me is HY Block Capital. I tend to find it very easy to use and is something that I look at in the morning before I start to write my newsletter. So this is the setup, and I'll go through it very basically here. So at the bottom screen here, you can see these bars here. Green really represents longed leverage traders, and the shorts you can see in red over the short and the medium term. Now, I guess there's some key points that I'm going to get to, but that's basically what you're seeing there and what the green and red blocks represent. And on the right-hand side of the screen, you can also see those bars, and they're represented by the amount of volume, i.e., the profile in terms of just how large they are, and how many traders are going to be liquidated around those levels if the price reaches them. So obviously, like the larger the amounts it tends to be where the price is going to gravitate towards. So I guess in terms of nearby trading action, the best way I think to use this is for short-term trading purposes, because obviously long-term trading is not really that's good. But if you want to see intraday or maybe weekly setups, depending on the average daily ranges, then this is a really good snapshot of something to look at, and obviously it gives you a hint about where the market could potentially go to, and also, you know, the type of conditions. Also, you probably need to profile, are we in a strongly trending market? Are we in a range-bound market? And that can help you decide whether the market is going to go towards these levels or not. So if we look at Bitcoin, for an example, if we just want to use this as a trade setup, we can see that lots of long positions were opened over the weekend around the highs, around 68 and 69,000. So when we tend to see overly long positions, then in other words, what we could do, those long positions could be wiped out really by the stop losses in the market, and you can see they are referenced by the bars on the right hand side in terms of where most of the stop losses are. So if we consider like a perfect setup here, a perfect setup would be also these traders that are going extensively long around these levels, they could be squeezed down to around 66,000, and then the uptrend could continue. Something else to note is that traders got trapped last week trying to short around 64,000. And you can see it is normally no coincidence that the big spike in these short positions comes there, and then the market almost perfectly starts to reverse. I think with this a particular data point, we see it time and time again in the market. So obviously, as I've alluded to, is perfect for short-term timing. And I think as well, you know, as far back as it goes, maybe a couple of days, it can also help, I think, in terms of the weekly trading setup. And I think like the liquidation is best used by finding the largest areas, and that's often where the price is going to gravitate towards. And also the liquidation data this week is showing that we're going to probably move down towards, at some point, the 66,000 area. I think that's the key kind of area for me technically as well. So it's very good that the price is also starting to align for me, and this is a key pivot to watch this week, and that kind of fits in very nicely with what we're seeing with the liquidation data here, and specifically on the right-hand side, this big stack there. Also, I think potentially, if we look in the mind of the market makers, once we see one side being wiped out, then the market may start to trend again. And I think if we consider the broader trend, then I think we have to consider the possibility that um, both sides get wiped out, and then we start to pull back, and then maybe we go higher again. So if we look a little bit higher, we can see that traders that went short, they could ultimately be squeezed in the next couple of days towards possibly around that kind of like 72,000 area, something like that. So that's an area that I'm watching next week if we potentially head higher as well. So I guess in terms of short-term targets, I think we've covered it. And I think, because when large positions enter, we know that it's typically going to be retail traders and leverage traders in the market getting too heavy. And that's really the key point to note there. If you want to spot market reversal areas, it's also very good for that. And we can also combine that with candles as well. I think that's a very effective method, combining bullish and bearish reversal candles in there. So having a look at some of the altcoins this week, I think looking at something like Sol, it's kind of alluding to the same thing as Bitcoin in that lots of traders went high around 190. So from there, the potential to see a pullback towards maybe 175, maybe 178 looks great this week compared to what we're seeing there in terms of those heavy liquidations. And if we move past 190, then we'll probably shoot quite a lot higher because we've got liquidations there. So anybody who wants to go long Sol this week, have a look just underneath the weekend's lows at about 178 to 175 looks very good for me. If we then move on to XRP, XRP is very interesting. We can see that traders have been short there for a number of times. And I think here is the highest area here. It is looking at about 0.58. But for me, it seems that there's even greater liquidations higher up. So potentially the short squeeze, and based on these new shorts coming into the market, we could actually see XRP going towards 0.63, 0.64. And this can be great for predicting short-term trade setup. So potentially we don't want to be short Ripple next week because it looks like the liquidations to the upside are much greater. Moving on to Ethereum, we can see that Ethereum has very or relatively little liquidations to the downside there, but it has some serious liquidations to the upside. And note the amount of traders that have been going short and still going short. So it could be a case of Bitcoin goes lower and altcoins go higher this week. And if we look at this, like we can see 3.4 all the way up to 3.6, there's a high probability that Ethereum won't pull back at all this week based on this leverage data alone. If we move on to something like Litecoin, which I'm increasingly disinterested in, it seems again to be the case that the higher amount of liquidations are to the upside. And even though we've had lots of shorts there, we've still had marginal shorts in the market. So it does seem that there's like a propensity to move forward higher here. So maybe $74 looks to be targeting. If we did have a strong bearish pullback, then you're looking at about 67, but it seems unlikely to me. But then again, anything can happen with Litecoin. If we have a look at something like Binance Coin, then it looks to me like the liquidations to the downside are greater. So again, the probability of the market moving lower is further increased. And we can also see, based on these longs coming into the market, it's also increased as well. So we could see 570, 565 being hit, and then we start to go higher towards the 600. So it looks to me, based on this liquidation data, that some altcoins are going to be doing different things this week and not what the market is expecting, and not particularly following Bitcoin either. So that's both interesting as well for short-term trading setups in the market. And if you can remember what I'm saying now, how it plays out the week ahead, I think potentially, uh, I think you could see how this could plan into a short-term trader's trading plan, just based on the liquidation areas and also the bottom below the positioning in the market as well. So I hope you enjoyed that. I guess a little segment into the liquidation levels and how we use them. And I've got a request next week for XRP and Track. Yep, I'm very happy to cover them. And I guess if I don't have any further questions, I will see everybody again on Thursday. And let's hope that Bitcoin starts to head higher. Thank you very much, and I'll see you soon.